Okay, so let's look at volume imbalance. Then we'll look at liquidity voids, and we are done for the night. Look at this. You see that gap? Last week, it happened amongst, I think, all the GBP pairs. And this week, it happened again. You see the gap? What causes these gaps? You can see that there was a jump for how many pips? From here, there was no continuation. The market just jumped onto a new level. For how many pips? 41.9 pips. That's quite significant. The market is not supposed to be jumping like this. It is not, we are not playing basketball here, so we don't have to be jumping. So when the market jumps this way, something is happening. And usually this type of jumps are formed as a result of news events that were released over the weekend. Saturday, Sunday, the news events, high impact news was released. So when the market opens on Sunday, it is reacting to the news that was released over the weekend. Okay, that is what causes those gaps. Once in a while, you see that there is no news, but the gaps form. I've seen it happen with gold on 3 occasions. From New York session, I realized that it happens between the the London and New York session overlap. I noticed it with gold on 3 separate occasions. As soon as New York opened, there was a gap, but there was no news event. There was a gap. I have seen it happen on gold 3 good times. So, but most of the time, these type of gaps are caused by news events. So that gap over there, okay, is an inefficiency. When we say inefficiency, it means that it is a type of price action that has deviated from normal price action. As far as normal price action is concerned, this jumping is not supposed to happen, because like I said, we are not playing basketball here, so we don't have to be jumping just like that. So because this is not normal, we refer to it as what? Inefficiency, price inefficiency. This is abnormal price action. That's why we call it price inefficiency. So those gaps causes imbalance over there. Now the market, not all the time, but most of the time, comes back to fill those gaps. The majority of the time, it comes back to fill those gaps. Some of the gaps take a very long time to get filled. Others take a shorter time to get filled. I think it depends on what time frame you are looking at and what market conditions we are currently facing. Okay. So you must take note of that gap. So the gap is the distance between this upper wick. Okay, this space, the space between this upper wick and this lower wick. I like to use a rectangle to make those annotations. So this is an inefficiency in price. Let's go further right. Let's drag it further right. Look at something. So this was one of the examples where they filled the gap, and then they traded right into this bullish order block before moving up. So this was a very cool setup. So you see, they filled the gap, traded into the nearest bullish order block, then they moved up. I have seen last week a similar thing happen. Let me show you last week's examples. This is Euro USD. Now it was on the GBP pairs. I saw one on GBP JPY and GBP USD as well. Yes, it happened. You will see it's better on the 4-hour time frame. You see, this week today they created another, or was it yesterday? It happened yesterday. Another one was formed. So look at something. Look at something. You see, I indicated over the volume imbalance. Let me do it all over again so you guys will understand. This is what I'm talking about. This is not normal. When you look at this, what does it look? It looks like a baby's mouth. You see one teeth here and you have to travel 400 kilometers before you see another. You see one tooth here and you have to travel 400 kilometers before you see another tooth. Babies, when they are growing and when they start teething, that's how you see. You see one tooth here, then you travel sometimes even 1,000 kilometers before you see another tooth. So this looks like a baby's mouth. There's a tooth here, you have to travel all the way here before you see another tooth. This is an inefficiency in price action. How many pips from here to here? 56 pips. That's very significant. So this is a serious inefficiency in price action. So mostly the market will come back to fill it because there's an imbalance there. The market has to correct itself. This one happened last week when on Saturday, last week Saturday, or should I say last 2 weeks. I'm not talking of the just past Saturday, but the one before. You know, there was news about Brexit. I think it was good news concerning the Brexit. I think they said that UK and EU were ready to sign a no deal, something. I read about it, but I've forgotten all the details. So as soon as the market opened on Sunday 10 p.m., it reacted to that news and it jumped up for how many pips? This was how it closed the previous Friday. Now see, went up for 219 pips. So once you realize that the market is coming back down, you should know that they are coming to fill the gap. And when they fill it, you are likely to see some buys, at least short-term buys. So look at what happened over here. There's a gap. The gap is between the wick over here and the wick here. So let's draw the gap. Let's make our annotations. This was a volume imbalance on 4-hour time frame. I like to add the time frames. Each 4. Volume imbalance on 4-hour time frame. So after they filled the volume, what did they do? Bullish order block. You see? So you could have bought it here. Here, you would have had a drawdown of 57. This is GBP JPY. It's very, very volatile. So when you are trading it, don't go in with big lot sizes. All you need to do is catch a good move on GBP JPY, and it will give you a lot of money, even if you are trading with a small lot size. So 53 pip drawdown, it went up for 200 pips. So that is a risk to reward ratio of almost 1:4. So you see how it works. Now look, this happened yesterday. That is another gap between here and here. See, they filled it. After filling it, what did they do? They have traded into a bearish order block. So you are likely to see sells again, at least short-term sells. So you can annotate over here volume imbalance. Let me do it VI because the block is too short, so I can't write the whole thing. VI H4. It means volume imbalance on H4 time frame. And this is a bearish order block on the 4-hour time frame. So they fill the volume imbalance, traded into the bearish order block. You can see sells. I am waiting to buy this pair here. This is my buy zone. Somewhere here. That is my buy zone. So I'm waiting. So this is a possibility. Tomorrow or within the week, you could see the market trade. Look, we have a drawn liquidity or a liquidity pool here. That's a black horizontal line I have drawn. Trade into the buy zone, then it starts going up. So I'm waiting to see what will happen tomorrow. We are likely to see sells on this pair down here, clear this drawn liquidity, and now we even have an we have equal lows here, right there. Then trade into that buy zone and then go back up. This is a serious possibility with GBP JPY. I think yesterday I spoke of this volume imbalance. I don't remember. I've not watched the video myself, but I think I spoke about it. Did I speak about it? I think I did. So that's another example of a volume imbalance. There was one on GBP USD too. Let's go and look at it. Good. This is GBP USD. 4-hour time frame. Look. You see? Volume imbalance. So let's write our annotations. Volume imbalance on the 4-hour time frame. What did they do afterwards? Traded right into this bullish order block. So that's a bullish order block on the 4-hour time frame. So you see, then they went up. How many pips? Assuming you bought on the bullish order block, 36 pip drawdown, over 260 pips. I didn't see this thing. I would have traded it. So 255 pips after filling the gap. Now we have a new volume imbalance here. So we are likely to see sells on this one too. Another volume imbalance. They have filled it. And this is a bearish order block resting right above it. Have they traded into it? They look like they have. Let me see this on the bigger time frames. If it also has a nice buy zone like GBP JPY. Yeah, I think it does. Somewhere here. Because this is a drawn liquidity. This long wick. That's a liquidity pool. So you can see the market trade back to clear it, then trade into this bullish order block, and then it continues going up. So you can be monitoring it throughout the week to see what will happen. Do you understand my explanation of volume imbalance? So we can continue. Okay, let's look for one more example. And let's look at GBP-CHF. If there was one there too. Yes, there was. Last week, it happened on almost all the GBP pairs because of the news I spoke about. You see, volume imbalance. This one was not very big. See, went up. There's another one here. They are finished filling it. There's a bearish order block here. So this is all liquidity. This is liquidity. Liquidity. Okay. I drew this one wrongly. This was last week's one. Between here and there. So that was it. After filling it, they went up. Now they have filled this one. They are likely to come back down. Good. So you guys said you understand. So let's look at the next thing. Liquidity void.